Welcome, guys, to this session based around liquidity concepts within price. In this session, we're going to be covering the core foundation that is behind this system and the way that you can begin to learn it. We're then going to go on to show you some examples of this playing out, and we're also going to give you links for live price walkthroughs using these concepts within. Okay, so as stated in the intro, today we are going to be talking about liquidity concepts within price, specifically the building, engineering, and overall withdrawal and deposit of liquidity within the market. When it comes to liquidity within the market, it is everywhere, but it's always going to be essential that you understand the principles that are at play when you see price moving in a certain direction, when you see it moving with certain characteristics, how you can begin to capitalize on this. As stated earlier, we're going to be covering the core foundation and the fundamentals behind this concept. Now, I'm going to start off by drawing something very simple that many of you would have seen before, and overall, you would definitely have come across, whether you're retail trading, whether you're using SMC, whatever it may be, you would have seen this before. Okay, so we're just going to start off by drawing something very simple, and don't jump to conclusions about what this is that I'm going to show you here, because it's not your standard what you would expect in terms of when you see this. Okay, so first things first, we all know what this is. This is a downwards moving market, right? We need to make sure that we are taking out all preconceptions of this price action movement before we start to learn what price is doing within these movements. Okay, so we don't want to come to this thinking this is trend line, I know what to look for, we're looking for breakouts, etc., etc. What we do want to be doing is taking the principle that we are looking at here and applying it in a methodical way that can give you a realistic understanding of what is actually happening within price. So first of all, what are the markets doing when they are creating these movements? Well, as we all know, they are trending down and they are retrieving liquidity from the lows. Each low serving as liquidity, each pullback acting as a reallocation of said liquidity, leaving you overall liquid at the highs and consistently producing lower highs and lower lows. We know this. This is the basics of understanding a trend movement. And we also know that this is a key element when it comes to understanding the directional movements within the market. One of the elements that people may overlook is how often you're going to see these movements produced on a lower time frame, how often you're going to see these movements produced on higher time frames, and how often they are going to clash with the narrative of one another. For example, a movement like so would be called a downwards moving market, but this can appear within a bullish range. It can also appear within a bearish range for a continuation. Where this movement is formed is going to tell you what is happening in terms of liquidity. Now, when we look at a move like so, we will look at each point here as a liquid point. But there is always an element of price that is going to supply you with how has this liquidity been put into the market, where has this liquidity come from, and why is it being engineered in this way. For example, at these highs, we know that there is liquidity being presented within the market and it's causing price to push lower. Institution is delivering price lower. As stated earlier, where these areas appear and what price shows you prior to this and during is the important part. Where has the liquidity for this movement come into the market? Now, there's a very simple way to determine this. When we find highs that align with a relative trajectory, so for example, like so, we're not looking for perfect trendline taps. We're not looking for price to play off of this. We're not looking for price to use this as support or use this as resistance. We're looking at this as what direction is Institute moving the market in right now. Now, again, you don't have to draw a line here. It will just help you with your visualization within price. When you have found these highs giving you the movements down, the easiest way is to figure out first if these are true institutional movements within the market or if they are more of a pullback movement. Based off of this, how are we going to determine this? Well, we're going to determine this by the characteristics within these moves. Now, the characteristics are imbalance, high volumes, and overall generally impulsive moves, making sure that these movements within the high to low is establishing a new low, the high to low is establishing a new low, the high to low is establishing a new low. Without establishing a new low, we will only be playing within the range that we have already created prior to these movements being established. So for example, if this does not come below this low, it is only going to be playing within the previously created range. Okay, it would actually be this high. So it's only going to be playing within the previously created range. So we must make sure that these are independently forming structure and price overall is delivering to new lows as well as delivering lower highs. When we have said to ourselves, these movements are delivering lower lows and they're also delivering lower highs, we have imbalance and we have unmitigated price within each point. So for example, we have fair value gaps in here, we have unmitigated order blocks within here, space being left each time the investments are coming in. This is going to confirm to you that a given move, in this case downwards movement, is being supplied by institutes, being engineered within the market. Okay, we are going to follow these highs back to the point where they no longer exist. Generally, you are going to find a relatively large, not always, but relatively large fair value gap. This fair value gap is going to tell you this is the initial point that the institute introduced liquidity to the market. If this overall movement does not have a origin, as we call it, and it doesn't have a fair value gap and an area that's clear that price has introduced liquidity from, then it will be either the first high that is created within this move. Again, we're going to show you some live price charts of this, so if you're looking at this thinking this drawing is absolutely terrible, it is. But if you don't have a fair value gap here, you can use the last up move before the downshift. You can use the order block that has caused this shift if an order block is present. Overall, you would look to target this area if price decides it wants to start taking this liquidity. The relevance of this, as stated earlier, is going to depend, 1, where this is formed, 2, where you are within a given range, and 3, if it has been confirmed by a higher time frame narrative within price. First things first, how are we going to even begin to identify what this is going to mean for us? Well, it's very simple, and what we're looking for is we're looking for a change in direction within the market, as we do with our swing ranges, as we do with our 5-minute ranges. Every single element and every single concept we use uses the same point of control essentially to gather that information and lean probability in our favor. This very badly drawn movement here is representing price action delivering to the sell side. Okay, now we know that these highs hold liquidity, so when we decide, well, not us, but when the market decides it wants to come up and take one of these points, this is what we will call an SP, or a shift point, which, if you are familiar with the liquidity entry and you're familiar with anything that we have taught revolving the liquidity entry or liquidity as a whole, then you will know what SP stands for and you will know what it means. Now, it stands for shift point, as I said, but you'll understand the principle of what it means for us when it comes to the market moving. Once we have established this, we then need to reassess what price is showing us here. So we know that we were traveling down, we know that there was liquidity within these highs, and overall, we know that we have taken one of these highs. So we know that that means there is a chance price may be looking to go bullish. So keeping that principle at the forefront of your mind, if we are going to go bullish, we need to re-establish the same characteristics that were present at each one of these high to low movements in the newly formed move. Now, why is this? Well, what's happening is Institute is delivering money down, and once they withdraw or remove the investment that caused that shift, because remember, these movements in the market are nothing more than a visual representation of orders being introduced into the market. The market is not being delivered in this way because Institute looks at it and goes, this looks like a good high to sell from or a good high to buy from. They are delivering in a systematic, normally time frame based way, which is going to deliver lower lows and lower highs. In this case, if we're looking at price traveling down. If price is traveling up, it's going to visually give us higher highs and higher lows as they consistently invest at better prices until it gets to the point where the investment no longer becomes valid or viable for them. So they will withdraw their initial investment, causing, in turn, a movement against the price action that's being delivered. If those concepts are playing out correctly, we should see the same characteristics delivered within this movement. So fair value gap, unmitigated order block that we look to follow in terms of institutional price action. So for example, high volumes. You may look for key levels, psychological levels. Whatever it is that you use to confirm order flow and institutional movements, you need to see the same elements being present here. If price is delivering in a trend direction on a higher time frame, so for example up, you will very often see these movements running down to build liquidity against the preformed directional movement in the market. Based off of that, if we see price deliver higher within here, we will find the last point within this trajectory that has created a low. Okay, like so. We created a low, so we find the last point. This becomes, as stated earlier, your SP. When you have established this SP, it means if we take this and the characteristics mirror across to the movement that takes it, that there will be a high probability orders are going to run against the movement that has just been established, as we've stated. We need to confirm this on a higher time frame to just have the narrative backing our idea, but mainly you can use this just off of the bat straight away how we're showing you now, okay? So once you've pre-established the idea that price is running back into the liquidity that has been delivered, where are we expecting this to go? Now, depending on where you are is going to depend on what the probabilities and possibilities are for this. Now, overall, if we're trending up and this is a major high, we would expect this major high to be targeted as we run in a trend movement. Okay, so price is more than likely going to play around within here. Okay, pull back to an area of value for us, whether it's an order block, fair value gap, whatever it is that you use for entry. And then price should deliver to the next high. If you are lucky enough to get this, again, this is not covering confirms or how you use them within swings or anything like that. This is purely the concept in its rawest form. Then we should see price revisit one of the key points within this, which is the origin, which we spoke about earlier, which is going to be, as stated, either a fair value gap that's been created above the highs that match a similar trajectory, or a smaller time frame high that maybe doesn't put in a low, but it is present prior to the volume picking up and these movements being established, or an order block that is unmitigated. Again, several points that we can look for within here. Mainly, we want to see it lead to a fair value gap that has picked momentum up. So we know then there is orders coming in at that point, for example here, en masse. Okay. So when we run this SP, we will begin to look for price to reach the buy side origin. Okay. And this is the origin of these orders being introduced into the market and the origin of price action delivering down in this case. Now, once we have established this push, if price gets to the buy side origin right here, then that is going to tell us that the liquidity has been withdrawn from the market. Price has reached the point that the initial orders were introduced. And overall, we will expect either a breakdown to re-establish a movement to the downside, or we'll expect this movement to run through here aggressively, taking us into a new range, delivering price higher again. So let's recap. First things first, we're looking for highs that lead in a trajectory that's roughly the same. It doesn't have to be exact. Again, you don't have to use lines. You don't even have to draw anything. As long as you confirm that these highs hold volume, unmitigated price, fair value gaps, order blocks that are untapped, all of the high liquidity characteristics. If they are there, we are looking for our most recent high, in this instance, that has formed a low. This is going to be your point of reference if price decides to go against our pre-established directional movement. Price takes that high and delivers the same characteristics in the movement that takes it. We will find an order block within here and look for a reaction at this base here. Now you can either confirm it with a smaller time frame move as illustrated here, and you would find your SP. In turn, looking for an order block here for price to tap into, delivering up to where? The buy side origin. This is the limitation of this liquidity delivery here. This is the limitation of it for one reason only, and that is because unless we have higher time frame targets, we cannot expect price to exceed the investment levels that have been introduced into the market to create this structure. There's a couple of key elements that we need to focus on. Number one, generally, these rules are only going to be respected if they're building liquidity in a counter trend direction. So we're looking for upwards movement with a downwards trending move to establish your liquidity, and a bullish, in other words, trending movement to take out your SP, and the characteristics follow over into this range. Now, of course, you can stack these on top of each other and have 15-minute SP leading you into hourly SP and so on and so forth, but we need to make sure we stay relative to price and we realistically establish a smaller time frame, understanding that price may only run to the original buy-side origin that's developed here. If we're using this small range as our entry, we should be looking to completely mitigate risk at this point and partial out of the position. Again, this is going to do a couple of things for you. One, it's going to ensure that if we do hit this area and we sell off, that you are protected. It's also going to allow you to have your first TP, which is going to secure you some profits pretty early on, and essentially just give you better of a foundation when it comes to if you possibly expand through these highs. Another element to make sure that you're following is we have to confirm that we do not, I repeat this, that we do not reach our buy side origin prior to pulling back to our entry point. This will invalidate your trade. Why will it invalidate your trade? Well, you lose your initial safety net, you lose your liquidity that you're using to trigger, and you also lose your first partial. We cannot compromise this if we're looking to trade within these small parameters. Based off of the same principle, if, for example, this high, let's say, is a higher time frame point of liquid that's been built over X amount of weeks or days, and we hit this, first, we can, so for example, if we come up and this is a higher time frame SP right here, we can then look for a pullback into this area for a confirmation only entry to continue higher, as we have confirmed higher time frame SP will lead you to the higher time frame origin, which will be wherever this drawing started. Pretty simple, but overall we are tracking institutional structural highs, new institutional investments, and then reinvestments at particular points within price. So make sure you are understanding the principle behind this, and you have to make sure that you apply the rules religiously for this to show you any kind of results. Let's go down to live price, and I will show you some examples that have played out today and some examples that have played out earlier in the week. Okay guys, so here we are down on Euro USD. This is the 15-minute chart, and again the time frame is going to change depending on what kind of range you're in, what direction the market's traveling, what kind of systems you're using to confluence this, and overall how you're going to essentially be trading. You might be scalping, you might be swing trading, whatever it is that floats your boat. Very, very simple and easy to see. I'm about to cover this chart in pen like I did earlier. And what we're going to do is we're going to first just look at the movements that we have here, okay? And again, the time of day that they're formed doesn't hold any value. As you can obviously incorporate, like I say, Asia highs, etc., to give confluence to these scenarios, but overall it's a case of structurally following the narrative and how price is moving. Now you can see very clearly that we have an order block up here, and from this point we've had 1, 2, 3, and then a small high produced here, all in pretty much the same direction, following almost exactly the same path. Looking at these highs, you can see that this high has clear imbalance within here. It clearly has shifted price aggressively down, forming a new low. Taking out the previous low, which is here, forming a new low. We've then pulled back, tapped into this area again. So remember, we're not trying to trade off of these zones. We're not trying to use these as, support resistance or anything. We're using them as a visual tracking of liquidity. From here, we have got clear fair value gap, clear momentum to the downside. Exactly the same here, clear fair value gap, clear momentum to the downside. Exactly the same here, clear fair value gap, clear momentum to the downside. This is the last structural high that produced a new low. Therefore, this is our SP. Now, this is, like I said earlier, a 15-minute liquidity creation. The buy-side origin is right here. Again, this is just placed at the high. Overall, in a scenario like this, you can use the fair value gap. You can use the last candle that caused the movement down. You can use whatever part you like. For this, I simply just stuck it right there in between those two candles, because if we get within that area, we're already partialing out of this trade, or we've already taken majority of our profits. We're not sitting there trying to run this to, the next extreme higher. What do we see here? Well, price comes down, 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 down. Then it comes up and it taps our SP. So it's at this point we have established price may want to retrieve the buy-side liquidity that sits at the origin. Now, worst case scenario is it completely ignores this and it drops like a stone and never comes back to this area. But that's going to happen. It doesn't matter what concept you're using, there is always a possibility of failure. So don't expect this to be 100%. But when you go and test this, if you have applied the rules and you're taking notes through this session, you will see this working a lot. So once we take this SP, that is our confirmation to then look for a lower time frame version of this happening. Now, of course, you can just take this SP and say, right, I'm just going to buy from here, stop loss below here, I'm going to trade this. Cool, that's what you want to do, that's up to you. But realistically, we need to confirm it using the fractal nature of the market. Again, this is not a session on what you should be doing for entry. This is not a session on how you exactly use this. This is a session to walk you through the fundamentals of it, why we use it, and how it actually works within the structural movements of price. Overall, we have an area now. What I've been doing lately is highlighting the SP high down to the SP low and marking that as your area to look for a bullish movement within the market. Okay, so if we come down to the smaller time frame, which we're going to do in a second, let's get rid of this. It's kind of giving it away with the illustration, so I do apologize, any spoilers here. But we're looking, in this case, we have a down move before the upshift, and we have this highlighted in green. This is a refinement of the downshift before the up move of the SP. It's a refinement of this. We can look for a movement on the 5 minute. We can look for it on the 1 minute. It all depends on where you started as to where you're going to end up. Again, we're going to go deeper into this the more you guys become accustomed to it. You can see price here was delivering bearish. It was going bearish, 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 until all of a sudden we notice that there is a pretty clear trajectory that's given. You can see right here that we have a rather large fair value gap that's delivered. We have one high, pushes down, puts in a low. Two high, pushes down, puts in a low. You can also count this as a high. And I believe there is another right there, this high, which also puts in a new low. We realistically need to have a minimum of 3 points of liquidity for this to hold true probability within the market. Anything less than that could just be two highs that line up in a similar direction, which you will find everywhere. Okay, so we really want to see 3 or more points that hold the same trajectory and overall deliver price in the same manner. Okay, and you can see at these points, clear momentum here. There isn't a huge amount of imbalance, but there is clear momentum and price was traveling down relatively quickly. The same thing applies here. We have imbalance created here and price is delivering down. Same here, we tap in close to that area and we deliver down impulsively. So we're looking now for the same scenario to happen. You can see we've got the buy side origin highlighted and we're looking for price to take a high that has produced a new low. Now, what I am going to do is we create another high. So let me just back that up 1 second. We actually produce another low down here. If we zoom in, you can see that we tap in again. So let's just delete this for now so we can study what we have here a lot clearer. I want you guys to be able to understand this principle as easily as possible. So you can see we put in a new low. We're not looking for a break. We're just looking for a new low price to be delivered, like so. So we know that this high also holds the same characteristics, fair value gap, clear momentum there. That is a high that we can use as an SP. But we would expect price to just continue traveling down like so. We know eventually it is going to push higher, right? We know this. We track it until price does something different. Now we're in an area of a higher time frame SP that we're looking to establish this movement already. So we've already confirmed it on a higher time frame bias. So confirming it now on a smaller time frame, in other words, the 1 minute, would give you your entry. Let's play this. And you'll see price comes up, takes it. So it's at this point that we will establish either a refined order block to take an order from, or, as we stated earlier, the SP high. So from here, we establish that as our SP high, down to the low it established before it was taken. Now, the reason we do this is if there is no refinements to be made, you don't want to just eyeball an entry. We know that price will revisit this area if it's going to deliver an entry. If it's not going to deliver an entry, it won't revisit this area. So as you guys may have seen earlier, we had an order set like so. Stop loss below the SP low. Again, this is not a how-to on entries. I'm not telling you this so you can go and essentially trade it straight off the bat. I want you to go and learn the concept, apply it, figure out how it works, and then you can begin using it to enter. We know where the buy side origin is. If we hit this first, it is going to change the probability of the scenario. But because we've confirmed it on a higher time frame, it's also going to mean taking this buy side may not invalidate our entry, depending on how well it has delivered on the higher time frame. Then we will just enter even if the buy side origin is taken, as we explained in our drawings earlier. So we'll play this again here. So at this point, we're looking to enter this. We've got a limit set. We're looking to enter. Price revisits, taps us in. Now we know by probability we should be seeing this move. Now, why did we set an order here? We set an order because we saw imbalance, momentum, and clear movement to the upside, knowing that we should take this high, and eventually meet the origin. Worst case scenario, if we're going to meet the origin and sell off, it would tap into here and then break down. Let's continue to play this. Another huge impulsive move. Brilliant. Buy side origin hit. We now need to secure our position and look to partial this. And you'll see from here that we continue to work our way. I'm going to go back to the 5 minute now. Overall, we were targeting the swing high here as we were in a bullish swing range at the time. We continue to make huge strides to the upside. And that was a movement that was not fueled by fundamentals. This is just truly an expansion once the liquidity has been exchanged within the market and it has reached a point that it is ready to expand. I like to look at it as loading a weapon, aiming it and shooting it. All of these scenarios lead up to the shot being fired, and once the shot's fired, the only thing left to do is for price to hit the target, which of course we know may deliver, it may not. This is why we need to apply this principle with caution if you're using the smaller time frame as your entry without a higher time frame confirmation to back it up. So let's just recap what we've seen here on live price. We've seen price deliver bearish here within an area that we're looking for bullish movements. We've seen the same scenario occur that happened to the left here, which is liquidity being delivered within a bullish swing range. The SP being taken. We have then our higher time frame, which we have refined down to find an area that is going to give you the most probable movement of liquidity. Like I say, I do not expect you to just watch this video and go, oh cool, I can just, go and find these highs and lows, and every time it comes and taps it or whatever, we're going to get in. That is not the case. We need to make sure that we're aligning with our swing ranges, out of the way of fundamentals. We're aligning with the liquidity build, and overall we're aligning with the narrative that a overall price action movement delivers. What I would recommend you guys doing is heading down to the description down below, checking out the live price walkthrough videos, which are showcasing this concept as price plays out live. I give you a commentary telling you what I'm expecting, what I'd like to see, and overall we have done that on 3 different pairs so far, and we will continue to deliver those to you to show you this concept in full. In the next video, we're going to be covering more details in terms of entry and how you can use this within swing ranges. If you have enjoyed this video and this has helped you learn a new system within the market, then hit the like button, drop us a comment down below, and I'll catch you in the next one. Peace out.